PPI came out this morning. It was super hot, 3% versus 2.6% year over year expected. They moved them around a little bit. Bonds didn't really budge. Equities moved more than bonds. I am curious, gentlemen. I know the answer to that anyway. I'm not even going to ask that setup question so Tom could just torpedo it. My question is, what's likely going to happen is you can't raise rates. I mean, you can't keep cutting rates, can you, Tom? Mm-mm. Can you keep cutting rates when you got inflation, PPI
not here.
At 3%? What do you mean?
Not with bonds at 417, you can't.
Exactly. They're telling you.
I'm sorry, not with bonds at 117. No, you can't.
117.
Yeah.
Yeah, the 2 years barely moved because September came around when they did these cuts. The 2 year was at 3.5%. It was saying, yeah, we're going to cut. We're going to get the short-term rates down to 3.5. With the 2 year at 4.11, it's basically telling the Fed you're not going to do much next year. You're maybe going to get off one or two cuts, or you might pause after this December meeting. So, gentlemen, I'm curious. Do you think they even cut in 2025? What would you assign the probabilities that they don't even cut all of next year?
0.
You think they will?
Yeah, they will because they've already committed to it.
With a new Fed, a new everything, you don't.
They're not going to have a new Fed. I don't think they're going to touch the Fed at all. I don't think they're going to do one thing. I think they're going to. I think everybody's going to stay in their place. I don't think they're going to have. I just think that they've committed to it. I think they continue. They have one cut in December and maybe one cut next year. But I don't think bonds are doing anything. I think this bond market, the story's over. I think they're going to trade between 115 and 125 for the whole year, 2025.
Yeah, you have said that in the past.
I don't think they're doing anything. I think they're a dead instrument. I think you got to buy them in every dip and sell them in every rally.
I'll give you one reason they shouldn't be cutting rates, and that's fart coin. Did you talk about this morning or yesterday yet?
Talk about what?
Good. That was the reaction I was hoping for.
No, I didn't hear what you said.
Yeah, fart coin. It's a meme coin out there. It now has a market cap of $560 million, which is greater than 38% of all publicly traded companies in America. That's one reason why we likely shouldn't be adding more liquidity to this system, Tom. Do you have any allocations to Fartcoin right now?
Spell it, please. I can't hear what he's saying. Is it
Fartcoin?
Fart.
No, I'm saying what you think I'm saying.
Yeah. Oh, yeah. Fartcoin. F-A-R-T.
Yeah.
Yeah.
It's like a new version of a Dogecoin.
Yeah,
just a silly joke of a coin.
Yeah,
which now has a market cap greater than one out of every 3 publicly traded companies, Tom.
Yeah, that should not raise a red flag for anybody.
They always say they never ring a bell at the top, Tom. Perhaps
I know they never ring a bell. That's what I'm saying. Flags. It should not phase you. They should not ring a bell. Yes. I understand that.
All right. Speaking of cryptocurrency, BlackRock put out a report that recommended a 1 to 2% allocation towards their Bitcoin ETF. Surprise, surprise, that once they put out their ETF, that they now are recommending a specific dollar amount.
Yeah, they're 3 years behind. They're 3 years behind Tasty. But yes, 3 years ago, we said everybody should have 1% in Bitcoin or in any kind of digital asset.
That is true.
And the reason they did this is because they said they were getting the question nonstop. How much? How much? How much? How much? So I'm curious. I know a couple of years ago when we talked about this.
That's a stupid reason. If the reason they gave is because we were getting the question, that is a stupid-ass reason, and that person should be fired. The real reason that you do it is because it's statistically viable. It actually makes sense based on the implied volatility of digital currencies. Putting 1% of your portfolio into digital assets, given the implied volatility, you want to call it alpha, call it whatever you want. But what it's done is it has added to portfolios, and there's virtually no downside from it, at least for the last, whatever you want to say, 12 years. So it makes sense as a asset class to add it to your portfolio. That's what they should have said as the answer.
Would you say 1 to 2%? Like as a flat number, or is your number higher than that, Tom and Tony? Is your number higher than 1 to 2%?
No,
and
my number
do you think age matters?
Yes, 100%.
So you think a younger person should have more? I'm sorry, but
I don't. It's not that I think; it's that they think. Like I was talking to my son last night because he's in Chicago, and I said to him, he said, Dad, have you sold any of your Bitcoin or ETH? And I go, not really, but I don't have that much. It's a small percentage. And I said, what about you? And he goes, not selling a one lot, not selling a single dollar's worth. And I would say he's probably, I'm guessing, I'm just guessing.
Does he have the altcoins that really haven't gone anywhere?
No, he's mostly got Bitcoin and ETH. But he has a couple of he has some Cardano and Solana.
I have some of that crap too.
But he said to me, he's 80% of his investments.
Oh boy.
He's 80%.
Yeah, but that might be, $1,500.
No.
I know he's a sad enough. What am I thinking?
But he's got, he's 30. He's 30.
He got that FU money. I forgot.
He's got his own money. He's 31. Say he's 31. I don't know how old he is. 32. He's 32.
Don't know how old he is?
He's 32. So at 32.
And I'm the parent. I'm the bad parent.
So at 32, Vic, he's telling me that he's got 80% of his stuff in digital assets. I
had 80% when I was that age in the product that I loved, which was my business.
Well, your business is different.
Well, I get it, but that's what he loves. That's what he's doing.
I didn't argue with him. I said, fine, do whatever. I mean, but he asked me, he said, is there a difference in age? And I'm like, yeah, I have less than 1%, and he's got 80%.
Yeah.
So the answer to that question is, I think that's
notional value is the same. You would do that trade 1-to-1.
I think that's
traders.
I think that's pretty normal now. I think younger people do.
I'm between 5 and 10, and I don't mess with the meme coins at all. Bitcoin, straight Bitcoin, not even ETH. I trade ETH.
That's a good number for you.
That's about it. But I'm between 5 and 10.
That's
and
a big
I'm 38
number.
years old for reference.
Now I'll be honest. I have it in a separate account here at Tasty Trade, and if I had access to the account like I do every day here, I probably would have been out already. So there you go. There
That's
goes
probably
that.
a good thing to lose the password. That's probably the right thing to do.
I just don't look at it. It's in my account. I just don't look at it.
Yeah.
All right. Speaking of rising global liquidity, that's the theme here today. It's liquidity, but I'm bouncing all over the place with this theme. The Chinese Politburo met the other day and came out with a statement of dangling the fiscal easing fiscal policy or fiscal stimulus without any real details. Stocks pumped for a day, spent the last couple of days coming off their highs. Nobody's really talked about China, I think, since September when they had this first announcement. The likelihood that they're going to keep stringing everybody along until next March. In March is when they'll actually give details to what the actual stimulus plans will be. For now, they just keep putting out these headlines that seem to get the market excited. You get a one-day pop followed by, a fade. I'm curious, Tom, is there any interest here in continuing to play China, or do you think the trade is over for you?
No, I'm in. I mean, I'm not.
You're in.
It's not all in type thing, but I'm in. So I'm definitely long China. I'm long Baba, long Baidu. So I have something else too. I don't know, but long Baba and Baidu, and I'm not even considering getting out.
The valuation of the U.S. markets has never been higher relative to the rest of the world.
That's right.
By a few different metrics.
Yep.
So everyone is talking about the TINA trade, which is a short-term acronym or an acronym for there is no alternative. It's the reasons why you should pile your money into U.S. equities, in particular U.S. technology. I don't know.
Actually
call me crazy.
It's actually the exact opposite. In my world, it's the exact opposite because I'm a contrarian. So if everybody thinks that, there is no alternative, that's absolutely idiotic. The reality is, Dylan and I talked about this yesterday. We talked about it. We talked about a concept called American exceptionalism. And
Sure.
That's basically, what you just said is a very American thing to say.
Mm-hmm.
Because that's what we believe. There is no alternative, but I don't think the rest of the world believes that.
I agree with that. I set this up as a contrarian discussion.
Yeah,
so
and I think it's a good discussion topic. I said Dylan and I, that was our truth or skepticism yesterday, was on American exceptionalism, and I think that Americans, and rightfully so because we have the numbers to back it up, but we believe that. I just think it's also an incredible red flag.
I couldn't agree with you more. And
Wow.
so what I want to do is
Tom and Victor agree.
no, I just think it's so obvious that when an instrument becomes rich, that you go looking for value. I just think that's the obvious. Unless you're a momentum trader and you're just trying to chase the moving averages, which I don't do. That's not my game. Some people are good at it. That's not my thing. I would rather go buy the thing nobody wants today and wait for them to want it tomorrow.
Yeah, I agree.
And I think in my personal opinion, there's a few instruments I wanted to throw at you guys and either have you accept it or reject it. The first one was China.
But hold on, Vic.
Vic. Go ahead.
I just want to say one thing first about that, because I think it's important. It's not just about that it's not just about that you're going somewhere else because you think it's better value. It's the reason that I think it's a red flag is because at some point you have to look at things from a risk reward perspective. And I think that the risk of, given where we are right now, I'm not sure that the rewards are going to be there. I think it's too difficult to squeeze at these levels. Meaning, if you think that you have some multiple of risk relative to the reward, that's the reason you can't do it. It has nothing to do with that there's a bigger macro picture or there's something else, or it's nothing to do with that you might think something else out there is actually cheaper. I don't really think that's it. I just think that there's certain times when, the reward's not worth it. The example, you have a gallon of ice cream in front of you, right? And you really love ice cream. But the reward of eating the whole gallon of ice cream, it's not worth it.
You look like Tony when you get older.
It's just not worth it. Like the risk, it's not worth it. And I think that's where the market is right now, So
I agree with that.
Okay.
But I also think that's the easiest way to say it. I could overly complicate it and say we've pulled a lot of future returns into the present. Therefore, you got to get some crazy innovations in the future in order to get the market excited and have the same level of returns that justify the prices you're paying. I could get overly complicated, but it's just a pot odds play, and I don't like the pot odds of the U.S. tech here. But in fairness, I didn't like NVIDIA at 900, which would have been the equivalent of 90 here. So, the risk is opportunity cost. You're not on the NVIDIA from 90 to 140, but I can live with that.
Sure.
I can live with that.
Understood. And that is, that's the other side of the argument.
Right. But I don't believe what BlackRock put out that, and this is a verbatim quote, we have argued since 2020 that we are not in a business cycle. Historical trends are being permanently broken in real time as mega forces like the rise of AI transform economies. The ongoing outsized response of long-term assets to short-term news shows how unusual the environment is. We stay risk on as we look to transform beneficiaries, as we look for transformation beneficiaries and go further overweight U.S. stocks as the AI theme broadens out.
Yeah. I mean, you also have to realize who the author is. They have no choice. That is their business. I mean, correct. They do not have another side to their business.
Once I grew up, I put the big boy pants on. I realized that this was marketing material more than it was actual market research. That's when I started reading this through what is likely the appropriate or proper lens.
Yeah. That is exactly what that is. That's a PR. That's a press release.
Yes, it's a press release for U.S. equities. That's exactly what it is.
Yeah.
So we already talked about China, which you said you're still in. You're not abandoning. Yeah. I think we'll continue to see vol. You're going to get these catalysts. September, the Politburo talked about this. That was unexpected. December, them talking about it, the announcement we just got in the last couple of days, that was expected. Usually it happens in November, December. They pushed it back till after the election so they could see what was going on in the U.S. before they made their statement. And now there's going to be another one in March. Expect an additional catalyst, up or down, I don't know. But you're going to see an additional catalyst once you get the details in March. The second one is South Korea. You're going to burn me on this because of the crappy and illiquid options market. But it was absolutely insane what happened over there over the last week with the existing leader trying to declare martial law and avoid impeachment and just trying to basically usurp power in South Korea. But all of that volatility created a short-term discount a further discount in equities. So I wanted to come and talk to you and say, would Tom Sosnoff touch this with my money? Would you touch the South Korean ETF EWY? Would you go near it, given the discount that's in price?
Honestly, I don't even know that I've ever. If you had asked me what the South Korean ETF is, I don't even know if I could have just told you it was EW. I mean, I don't think I've even traded it. Maybe in a cut.
Once you look at the spreads on the at the monies, you're gonna realize why you've never traded it.
Yeah, the markets are way too.
Well, the stock is only a penny wide.
Yeah, if you want to trade the stock, you trade
the stock is pretty decent. That's probably what we're talking about here, not an option position.
I mean, the stock is a penny wide. The options are there. Yeah, I mean, they don't even trade. Yeah, I mean, if you would ask me, I think we've traded South Korea once or twice, but I mean, it looks. Yeah, if you were to argue, I'd argue it looks cheap relative to something.
I would say this one's a trade, not an investment. I'm leaning a little long here. And
you bought this South Korea?
Oh yeah, but I bought the equity. I did the thing that you don't do.
I'm gonna nibble on the long side. All right. I just bought some EWY.
Worst thing that could happen, because if this takes him down, Tony.
No, it's not gonna.
So good.
55.88. I just bought some stock at 55.88. It's right at the offer right now. It's no big deal.
Well.
Tiny
Welcome,
bit,
my friend. You're a brand new holder of a bunch of South Korean ADRs, which are.
I mean, he typically curses at you, Victor. Now he's got new reason to curse at you.
Yeah, negative reason.
This is good. I thought you were going to go with the.
I really don't trade South Korea much, and I don't know much about. I mean, I only know what I read.
Yeah. All right, EWW is the second one. That one was just a fun short, maybe we get a pop. EWW is likely, in my personal opinion, more interesting longer-term play. This is the ETF that tracks Mexico.
Okay.
Mexico, I think, is in a unique position given all of the onshoring and nearshoring that is happening and will continue to happen in an America First policy stance. I think people are beating this thing up because they think U.S.-Mexico relations will go back to something similar to the first Trump administration. I don't think that's going to be the case. I think they're going to be good working partners. I think this is an opportunity, and this has a much more liquid option market, more interesting.
Yeah, this one's more interesting to me. So I'm going to buy a little. Right now. I just bought some. Okay?
Oh no!
He bought twice. He bought twice as much as that EWY piece of crap.
Well, I like Mexico.
This garbage EWW.
I'm incredibly bullish. If I was to pick one country that I think has the most upside, not Mexico necessarily the markets, but like the one place that I think has, only because we're picking up so many traders from Mexico and so much.
Oh, Mexico, yeah. I thought you were going to say China. I was like, no. China hasn't participated.
No, I'm going to say Mexico. If there's one place that I'd like to bet on, it's Mexico.
I agree with you there.
I think so too.
I mean, I can't even. My experiences dealing with finance in Mexico are so positive.
Yeah, they're innovators. They're looking to move forward. They're
looking to move forward. I wouldn't call them innovators.
Yeah,
in finance.
I get it, but they embrace change, and they're willing to.
They embrace technology for sure, and I think that there's incredible upside in Mexico. So yeah, I would be a buyer of Mexico.
All right, my last one here is not necessarily, it's not going to be a country here, but it's related to liquidity, is gold. What do you guys think about gold? It's at a high, which means at a price extreme, you guys are probably taking a more contrarian position, which is fading it, if anything. Is that what you guys are doing?
No.
Or no position?
No, I have positions, but we are just a short premium. And so far it's been quite a challenge, to be fair. It's been quite a challenge. We have not done well, in generally speaking.
Yep.
All right. Well, I'm gonna give you a trade idea, and the people a trade idea here real quick before I get out. Love it or hate it. So gold is at or near all-time highs after the last 3 days of rallying. Today it's a little bit weak, but we're nearing all-time highs again. But what hasn't caught back up to the all-time highs is all of the miners. So in particular, Newmont Mining, NEM, which was trading around $58, $59 last time gold is at or near its highs. It's now at $42. It's taking a big hit. Some fundamental reasons for that. My point is trading the price divergence between the underlying metals have rallied, copper's off of its lows, silver's rallied a little bit here and towards the mid 30s. Gold's at its all-time high, but the miners really haven't gotten back up off the mat. So this would be a long in the miners. My preferred miner is NEM. How do I play this? Vol's not expensive, so vol sellers can't really come in here and sell vol, but it is super cheap. So if you're somebody who wants to come in here and perhaps do a call spread or some type of stock replacement, vol's super cheap on this one.
Zebra trade in NEM. Zebra trade.
Bingo.
That's what you do. 100%.
Bingo.
I'm with you there.
My
I like it.
experience in NEM is that it's an extremely difficult stock to make money in. That's my experience. I mean,
there should be a Sosnoff rank, not for liquidity, not for like options market, just ease of making money. How easy is this stock to make money?
It is an extremely hard stock to grind some money out of. And I have found that to be the case with a lot of miners.
Yeah, they have low volatility
all the
They're
time.
low vol.
Really challenging. Just,
All right,
just to give you the.
All right, you're gonna leave the money for me then. More money for me. Sosnoff's not in this one.
More money
This will
for
be
the
the one that works.
More money
the
for
one
the
that works.
Joneses.
More money for us, Vic. I'm going to join you on this, I think. I like
Watch
it.
this. South Korea and Mexico are going to tank because he followed on those ones, and Newmont's going to be trading at all-time highs next week. That's how that works.